Okay, let's unpack this. Today we're diving into CG Power and Industrial Solutions. We're not just looking at the numbers from their Q1 FY26 earnings, but really trying to get the story behind them. Our mission, basically, is to pull out the key insights, the stuff you really need to know, from their earnings call and reports. A shortcut, if you like.
Exactly. And these results, they're like a window, aren't they,
Mm.
into India's industrial pulse and, CG Power's own strategy. We'll look at what happened, sure, but also why it matters for the bigger picture, for the economy, for India's manufacturing goals, things you care about.
And right off the bat, these Q1 numbers, well, they're pretty striking. We're talking an all-time high quarterly standalone revenue. Get this. INR 2,643 crores. Yeah,
Mhm.
that's a 25% jump compared to last year.
Okay.
And the standalone profit before tax, the PBT, also an all-time high. INR 383 crores,
Oh,
up
yeah.
18% year over year.
Strong numbers. And the profit after tax, the PUT.
Yep, followed suit, grew 23% year over year, hit INR 286 crores.
Okay, solid profit growth. But what really catches my eye is the order situation.
Hmm.
They reported a massive 56% year-over-year growth in order intake. That's huge. INR 4,764 crores.
It is huge. And beyond those top line figures, what about the underlying health? I'm looking at this unexecuted order backlog, INR 11,971 crores. That's what, 70% higher than last year? Gives them serious visibility.
Absolutely. That backlog is key.
And then there's the cash flow, free cash flow of INR 339 crores, which is like 119% of their pay
Right.
plus an annualized return on capital employed, ROCE, of 35% for the quarter. What does that tell us? Is that good?
Good. It's excellent. A 35% annualized ROCE puts them in the top tier for capital efficiency in this sector. It means they're not just growing, they're growing very profitably, very efficiently.
Okay.
And that financial muscle, especially the free cash flow, gives them options
Yeah.
for investment, for navigating bumps in the road. And crucially, it's not just the standalone picture. If you look at the consolidated figures, including subsidiaries,
Right. How does that look?
similar story, really. Aggregate sales up 29% to INR 2,878 crores. And the consolidated order book, even bigger jump, 82% higher year over year, over 13,000 crores.
So the pipeline is strong across the board.
Definitely suggests that.
Now, you mentioned consolidated figures. I saw a note about consolidated margins being slightly impacted. Something about an INR 11 crore investment in CG Semi and lower fixed cost absorption in Europe. Does that sort of take the shine off things?
Well, it's interesting. They framed the CG semi cost not as a drag, but as a deliberate strategic investment, for the long term.
Ah, okay. Future proofing.
Exactly. And the European drives business, while sales were lower this quarter, the bookings are actually trending up. So it seems temporary. What's fascinating here is how these numbers, even with those small impacts, paint this picture of real momentum and the willingness to invest.
Right. Got it. So with that big picture set, let's zoom in a bit. Let's look at the engines driving this, the individual divisions, power systems versus industrial systems. Where did the real action happen?
Absolutely. And well, if you look at the additions, Power Systems was kind of the star of the show this quarter. A real powerhouse performance.
It really looks like it. Sales up 43% year over year to INR 1,070 crores. And the order intake, that jumped 111%, reaching almost 3,500 crores.
Incredible numbers.
Yeah, and the PBIT, the profit for the segment, was solid too. INR 225 crores, that's a 21.1% margin on sales. What's giving them such an edge here?
Well, it seems like a combination of things. They mentioned better price realization, which is key, plus just really strong underlying demand for power infrastructure in India. The whole energy transition thing.
Right.
And improved operating leverage. As volumes go up, costs don't rise as fast. They also hinted they're just winning more deals. Better tech, better execution, maybe.
And speaking of winning deals, they bagged their biggest ever single order, didn't they, for transformers?
That's the one. INR 641 crores from Power Grid, about $74 million. A 765 kV transformer package.
Huge order. They say 18 to 36 months completion, but think they can do it faster.
Seems so. And if we connect this to the bigger picture, winning against competitors on this scale says something. It suggests they've maybe got a stronger tech edge now or better relationships.
And they're backing this up with capacity expansion.
Oh, yeah. Big time. They want to get the current plant up to 40,000 MVA, that's megavolt ampères, huge scale by September, is around 20,000 now.
Doubling capacity.
Basically. And they've already started building a new 45,000 MVA plant.
Wow.
Management sounds incredibly bullish. They see this demand outstripping capacity for the next 5 years, mostly domestic demand. It's almost as a bet on India's infrastructure growth itself.
Okay, so power systems, firing on all cylinders. But let's switch gears. Industrial systems, sales grew, right? 16% year over year to over 1,500 crores, which is decent.
Decent growth, yeah.
But the margin, the PBIT margin, dipped down to 10.9% from 13.4% last year. So what's the story there? Temporary issue or something more?
Yeah, that dip needs unpacking.
Yeah.
The main culprits seem to be rising commodity prices they couldn't fully pass on.
Okay, that makes sense.
And also the mix within the business. The railway part is growing, but it has, let's say, complex pricing clauses. It's not straightforward.
So managing different pressures in different parts of that segment.
Exactly. It's a balancing act. Volume is good, but keeping margins healthy takes constant work on costs and mix.
Right. And within industrial, the motors business, the LT low-tension motor market has been tough, right? Stagnant for maybe a year more?
Yeah, about 4 or 5 quarters, they
And-
said. Flat to slightly down.
But CG Power reported decent progress. How, if the market's tough?
Good question. They pointed to being proactive, working on the commercial side, optimizing costs, and finding new niches, new verticals to sell into,
Hard.
and they pushed through a 5% price increase from July 1st. Apparently, competitors are following, which suggests CG has some pricing power even now.
Interesting. And high-tension HT motors.
That's different. More customized, niche market. Demand is strong there, and they're planning to invest more in design to grab more share. Seems like a priority.
Okay. And railways, you mentioned the mix change. Any specific projects?
Yes. GG Tronics, which is a subsidiary, landed a pretty significant order. INR 148 crores for Kavik.
Ah, the collision avoidance system.
That's the one. For Northwestern Railways, it's a 2-year execution timeline.
How critical is that for them?
They're really focused on executing it well. The target is like 100 installations a month soon. Management called the overall Kavik opportunity phenomenal, but it all hinges on getting it done on time.
So execution risk, but huge potential.
Right. And it's a big deal for modernizing India's railways, safety and all that.
Definitely.
Plus, they're looking beyond this, exploring propulsion systems for Vande Bharat-type trains, even outside their current JV. So, deeper railway involvement seems likely.
Okay, now, let's talk semiconductors. This feels like their boldest move, a huge leap.
Or
Right?
really is a completely different industry, super competitive, very capital intensive.
So for the first time, Q1 includes Axero, the RF semi business they bought from Renesas.
Correct. And CG Semi, their OSAT outsourced semiconductor assembly and test venture.
And Axero is already bringing in revenue.
Yep, flowing in from the acquisition. For CG Semi, the plan is mini plant production in 2026, main plant in 2027. And they said it's actually a little ahead of target.
That's good news. But it costs money. Employee costs jumped 52% consolidated, and there was big capex, INR 383 crores, mostly for CG Semi.
Right. It's a massive upfront investment. But they stress it's strategic, intended to shorten the time from starting manufacturing to actually shipping product.
And they're not funding it all themselves.
No, that's crucial. Their contribution's around INR 1,700 crores, but they're getting significant capital support. 50% from the central government, maybe 20–25% from the state.
So heavy government backing, which I guess raises that bigger question. This isn't just CG Power's bet, is it?
Exactly. It plugs right into India's ambition to become a semiconductor hub. Their success, or even their struggles, will be watched closely. It's like a test case for national industrial policy.
A big strategic play with national significance. Okay. Beyond semis, what about global reach?
Exports. Yeah. They mentioned progress on motors exports. Laying the groundwork, basically. Capacity, go-to-market plans.
Like setting up shop overseas?
Kind of. Establishing a presence, personnel, channel partners. They mentioned Northwest French Africa as one region.
Okay.
And it's for both standard industrial motors and the customized ones. Includes setting up service centers abroad, too. So building a proper footprint.
And EVs, electric vehicles, where are they in that race?
Still early days, it sounds like. But their three-wheeler motors and drives are apparently ready. Past homologation, now being tested by the auto companies, the OEMs.
So supply could start soon.
Next few months, they suggested. But development for bigger stuff, like trucks, is still ongoing, a phased approach.
Right. And one last thing on future stuff. This service business idea, what's the long-term plan there?
They admitted a full 2030 roadmap isn't quite ready, but they are actively developing what they called a multi-stage service business.
Like what?
Well, one example they gave was fascinating. Motor as a service.
Motor as a service.
Yeah. Instead of selling you a motor, they make the investment, and you buy the energy efficiency outcome from them.
Huh. Interesting. Like a subscription for efficiency.
Sort of. It signals a shift towards recurring revenue, long-term value, not just selling a product once, selling an outcome.
That's quite a strategic pivot. Okay, let's tie some threads together. These results, these operational moves, how do they connect to bigger strategic decisions? Like the QIP?
Ah, yes, the qualified institutional placement. They successfully raised INR 3,000 crores.
Big chunk of change.
Yeah, and the issue was heavily oversubscribed, more than 3 times. Got strong interest from Indian and global investors.
When did that happen?
Opened June 30th, closed July 3rd. They allotted just over 45 million shares at INR 660 each.
So that money fuels all these ambitions we've been talking about.
Precisely. Capital for growth, for the semiconductor venture, for capacity expansion. It underpins the strategy.
And the overall vibe for management, what's their outlook?
Very optimistic. They're aiming for company-level PBT margins to get back up to the 14–15% range. And they expect power sector margins to go even better than the current strong levels.
Bullish.
Seems so. And on the macro stuff, geopolitics, India as a manufacturing hub. Their stance is interesting. They don't really change their core strategy based on daily news. They just keep investing in the manufacturing footprint they've planned, looking at global chances, related areas, steady course.
So what this means for you, the listener, is we're seeing a company firing on its core cylinders, but also making these really calculated big bets on the future, fortifying the present while building the potentially very different future.
Well put.
So wrapping up this deep dive, CG Power's Q1 FY26 really shows strength in the core, especially power systems, right?
Absolutely.
And these significant strategic bets in new areas, semiconductors, advanced railway tech like Kavashish, they're not just growing, they seem to be actively trying to shape their future, maybe even influence India's industrial path.
Which leads us to a final thought, something for you to chew on. Considering CG Power's really aggressive capacity expansions, their bold leap into semiconductors, their role in upgrading India's infrastructure like railways, what could the ripple effects be? How might this trajectory impact India's overall industrial competitiveness, its tech self-reliance, over the next, say, decade? What changes, what innovations might we see directly or indirectly because of these kinds of large-scale corporate strategies playing out? Something to think about.